Hi everybody, I'm David Hanna from Cornerstone Tax and welcome to our video, what is capital gains tax on property? Well, a capital gain is literally what it says. It's a gain in the capital value. And prior to 1965 in this country, those sorts of gains just weren't subjected to tax. And capital gains tax was introduced in that year. And since then it's been a constant feature of the money we all make on appreciating assets. But what about capital gains on property? Well, provided you don't live in the property, it's a relatively simple proposition. A residential property is subject to capital gains tax of 28%. But how do you calculate the gain? Well, simply put, you take the total cost of acquisition, add on the cost of improvement, add on any expenses of sale, and take that away from the sale price, and that is your capital gain. You then have to work out whether each of the owners has got any annual allowance, but you can do that by filling in your self-assessment tax return or by asking your accountant. Where capital gains on property gets really a bit more complicated is the capital gains on our main residence. Now, we all know that the capital gain on the house we live in is exempt, except that it's not always. For example, you may own a house that has got more than a reasonable amount of land, and in which case the gain on the excess land is still chargeable to capital gains tax. Similarly, you may not have lived in the house and occupied it as your main residence during your entire period of ownership, and you're required to apportion between the two. The bit where you weren't using it as your main residence being chargeable, and the bit where you were exempt. And there are a few small exemptions for a few months of vacancy or use for other purposes, and there was a letting exemption at one time. And so you have to very carefully map out the pattern of your ownership and see how it maps to all these different reliefs and exemptions. Now, for commercial investors in commercial property and owners of commercial property, it's an entirely different proposition. The rate is different, but the rules are basically the same, save that unless, like me, you spend most of your life at the office, that doesn't allow you to claim your office as your main residence, unfortunately. We're still saddled with the gains charge. Where you have to be careful is actually, and particularly in the light of the COVID crisis of 2020, is making sure that if you claim expenses for using your home as office, that is incidental to the ownership and not actually a discrete physical part of the property, which might cause part of your house to become chargeable to capital gains tax. So, in a nutshell, the increase in capital value over and above the cost and the improvement cost of our property is chargeable to capital gains tax. If it's our main residence and has been our main residence, it's completely exempt. Otherwise, it's chargeable at 28%. And if it's not a house, then it's chargeable at 10 to 20%. It's a lot more involved than that. I would always say get specialist advice, talk to your accountant, talk to your tax advisor. But remember that if you're disposing of a house, you now cannot wait until the end of the tax year and put it on your self-assessment tax return. You also have to separately report the disposal within 30 days to HMRC, or you may be liable to a fine. I hope that's given you some food for thought. Hopefully you will not fall foul of all these changes, and hopefully you won't even have to worry about all the exceptions I've spoken about. But if you do, feel free to ask your accountant the question or call us at Cornerstone. Thank you for listening.